Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, February 19th. Hope you guys having a great day so far. We do got quite a bit to go over, so we're going to jump right into it. On the economic calendar, we'll start off with the housing starts for the month of January. So one thing to look at in December, we had a 14-year high the previous reporting. It was at 1.608. It was actually revised higher at 1.626. So it comes to reason that we could have a little bit of pullback. So the pullback number that they had was 1.440, but it exceeded the pullback number. So we did decrease, but not by much, and it was at 1.567. So the media is going to tell you that we dropped by 3.6 when in reality it was really around 2.5%. And they're also not going to tell you that the previous month was also a 14-year high number. So if you look between the numbers, you'll get more of the truth. And these are still pretty good numbers. Now the disappointing part was they did pull back a little bit on single-family homes, which is kind of the lifeblood of real estate for us. So that was a little bit of a drawback. However, if you look at the building permits in the month of January, for the month of January, for December, it was at 1.420 million. It was supposed to increase slightly to 1.453 million, and it increased to 1.551 million. So fantastic numbers there, and that's actually a 13-year high. So we're starting to actually get some movement there in housing. Now, hopefully, we don't get a sudden increase of other listings in there, and then all of a sudden have a glut on the market. But right now, it doesn't seem like it's been this way a couple years now with the low levels of inventory. So this could be these are much needed. So from the perspective we have today. Now let's get into inflation data. Now, this is inflation for the producer price index. This is inflation for the wholesale level here, and those don't always get the respect because they kind of look at it, but and that's primarily because it doesn't always necessarily affect the consumer because sometimes if it goes the costs go up, they don't always pass on to the consumer, uh, and this can it doesn't always have it. So what we really look at is a CPI or PCE. PCE has more weight because that's what the Fed would look at, what they gauge for inflation. But however, let's kind of look into it. So you'll see that we had a pretty big spike here. December was a 0.2% increase. They were supposed to continue that same trend, 0.2% increase for January, and it had a big spike to 0.5%. So the headline number actually jumped up from 1.3% year over year all the way up to 2.1%. So a pretty big increase there. Now, when you strip out the food and energy, we go what they call the core PPI, and in December was at 0.2%. Increase again was at 0.2% forecasted, and it also jumped up 0.5%. And its year over year went from 1.1% to 1.7%. And again, these are kind of indications that we'll definitely be watching for in terms of consumer, how the CPI and the PC come up. So those are pretty big increases. Now later today, or probably right around 11 o'clock Pacific Standard Time, we'll get the Fed minutes coming out. Now, we don't anticipate any surprises, primarily because we had Fed Chair Powell speaking and testifying before Congress last week. So pretty much any data we hear from FOMC is probably going to be old news. So we don't anticipate anything there. So let's jump over to headline news. Stocks are up a little bit. It's yesterday it took a little bit of beating due to concerns over warnings by Apple and Walmart about how the coronavirus is affecting their profits for upcoming profits for second quarter. Uh, China came out and implemented some measures that they hope will stimulate their economy, or at least some of the small businesses that could help them to uh, to go ahead and uh, keep things going. So that's kind of easing some concerns by the investors out there. So they're kind of shaking off now some of the coronavirus. So they're hoping that that will help out. Later today, we will also have some Fed speakers throughout the day. So, there's always possibilities for some volatility if something's said that kind of surprises the markets. But for the most part, they've been pretty much in tune, and we've been pretty good about that. Now, one of the things we'll watch for on the Fed minutes, and maybe even one of the Fed members may even touch on it, if a lot of investors are expecting a rate cut this summertime, and with the jobs number coming up pretty hot the other um, few weeks ago. That was about 2 weeks ago, I think it was. We got those job numbers. They're going to wonder if that's going to affect that rate cut. So again, we'll be interesting to see if they proceed with that. All right, so let's kind of jump over see how this is playing out in the bond market. Bond market's down about 2 basis points right now. We were up a bit yesterday. We kind of pulled back. We ended up closing 3 basis points. So we were up about 8 basis in the morning. So we kind of pulled back a little bit. We do have the 25-day moving average moving upwards. We do have that as a floor support. We're getting this little bit of a star effect here, so something to watch for. Where that kind of gives it or indecisive decision which way it's going to go. Now, if you look at the yields are hanging just under 1.57. It declined a bit yesterday, but not as high. Today's a little higher than where it was. Again, it's like 1.566, I think. So just a hair under 1.57, and not quite a. As you can see, this wick here is showing some weakness as well. All right. So again, there's not enough change in there to make any rate changes. So mortgage rates will again remain unchanged, kind of like what we saw last week a bit. So it's not quite enough of a catalyst that's really kind of pushed it to give it any rate changes. If you guys are in California, looking to buy or refinance, please reach out. The best way to reach me is either direct message me or email me. You can see my information in the red. Email is the quickest turnaround time. I will respond a little bit quicker on that. Uh, been around a long time. We have a lot of loan programs, and we've created a lot of helped out, provide a lot of solutions for people who've had problems getting financing and hitting certain financial objections or criteria that they want to do, whether it's retiring or whether it's college planning, different things. We've been able to provide a lot of solutions for them. And then, of course, helping them buy the first homes to people who are moving up or down, uh, buying investment properties. We've got a lot of different loan programs for all scenarios. So you guys have a great rest of your day. Thanks so much for watching. We'll see you guys in tomorrow's video. Bye-bye.